All right, we can still continue along that line, talking about commodities and, of course, the market. And joining us for that conversation is economist with Financial Derivatives Company, Mr. Clem Igbanugo, joins us in the studio. Mr. Igbanugo, good morning. Good to have you a second time this week. And we're just talking about the markets there. I know we have a segment for the markets on Business Morning, but, I mean, FDC also delves into the market, and we've been seeing some red numbers. You know, even though yesterday I think it was flat, yeah. It closed flat. Yeah. And Dr. Mayther was just talking about getting the foreign investors back. Do you see that as, is it something we can achieve in this present time, or we have to be more patient and just maximize the domestic investors' strength first?
Yes, yes, of course. You know, basically you discover a trend since January, February, March. After election, it does appear that it's even getting worse. And it's because there's a whole lot of uncertainties in that ecosystem.
Yeah, we thought the uncertainty would go away with the election.
But the election, the contention is still there. So you look at what happened to Airtel Nigeria last week, almost 500 billion.
Even 2 days ago, it was down for 3 consecutive trading sessions.
The sell-off is because of the fear. The foreign investors don't know what will happen next, because there's a whole lot of cloud there. What's the Supreme Court going to say? Will there be a judicial miscarriage? Will people say, oh, we don't agree with this judgment? Will there be protest? Will there be peace? And stuff like that. So that, because for you to attract foreign investors, look at what happened to capital importation, down more than 20% year on year. And for fourth quarter, more than 50%.
Almost 50%.
Of course, because that apprehension, so there is tentativeness. You are just seeing the capital importation just showed us what came in, but it didn't show us what went out. Because the capital flight is now very much more than anybody could have expected that would happen at this time. So we really need to rebuild confidence in the market. And I hope that the institutions that are in charge of the electoral issues will be able to do justice to this, so that we carve names and ensure that we recover.
Yeah, imagine the connection from politics to the economy to investors. And this will obviously feed into things like investment, employment, GDP,
even
inflation,
your exchange rate,
FX.
Of course. You know, recently we've been studying some numbers in Africa and patterns in Africa, and we discovered that Nigeria had plunged in its rating in state legitimacy, meaning Nigerians, citizens, are not accepting the government as representing them. That is there. And we try to query why. We saw, because of poor performance of the economy, per capita income is low, and then poor rating on election performance. And what we've seen in Africa is that countries that have this trend tend to tilt towards a high level of fragility, crisis here and there. And that's where we don't want to get to. So, and when you have that economic instability, macroeconomic instability, when investors are not bringing in funds, where do you get the FX from? And that's crisis for your exchange rate, right? Already we have a debt problem, and we don't know what the next rating will be. Look at what happened in Ghana in 2021, December 2021, when their rating went so bad, investors began to take off their fund and their currency plunged. And so I think there's so much challenge at this time. But of course, they said it is during the time of war that heroes are made. So I believe that the government is
the mother of invention. So
tackle those issues.
But I mean, US seems to be having it good, because yesterday their inflation was out and it's down
5%.
I mean,
yeah.
And it's even beyond what analysts was expecting.
Analysts were expecting 5.1, 5.2.
I mean, what did they do?
But don't forget that March, energy prices went so low. Okay. So you see in that index, year on year, energy inflation declined by 6%, 6.4%. Year on year, month to month by 3.4%. And so core inflation is still high at 5.6. And that is why you discovered that yesterday the market rallied a little, you know, for oil. And then this morning we are seeing that oil price is now sliding, because that fear is still there. One is, the expectation is, if the inflation substantially moderates, Fed will not raise interest rate as much as expected at the beginning of the year, and that is good for investors, right? But with the core inflation still at 5.6, there is still concern that Fed may keep at least the 0.25 basis point that he did last time, right? And there is fear, inflationary concern. Because if inflation, recessionary concern, if inflation is still high, look at what happened to UK this morning. They just released their GDP number, stagnated 0%.
Yeah, they've been having a lot of strikes, so we shouldn't be surprised.
Of course, the public servant strikes and all of that. And so you see this sentiment is really affecting even the oil market itself.
All right, and can we expect that? I mean, for the month of March, the fuel queues reduced drastically.
Yeah.
The cash crunch was beginning to taper.
Yeah.
Can we expect that to feed into our inflation number and see a drop in our inflation number?
Exactly. That's what we're expecting for March. We're expecting that inflation could go down to 21.82. A little 0.06 deceleration. Basically, the strongest factor we've seen is that during at the peak of the cash crunch, farmers became innovative. All right, so I don't have cash. So, but I have this good for 20,000. If you can pay 15,000 cash, I can give it to you. Because some of those goods we are getting bad, eggs, chicken, a whole lot of stuff like that. So we saw most of those commodities moderating in prices in March. But that is over. Nigerian inflation is a legacy problem. Exchange rates, deficits, monetization, right? Supply, look at what happened in Benue, food basket of the nation. You're going to imagine what happened to that food supply chain from that agris and all of that. So in March, we expect inflation will moderate, but we're not having that same expectation for April, except things take a turn.
All right, so what else is happening in the commodity space?
Yeah, well, of course, as volatility remains in the oil market, we're also seeing gas still plunging further. And, but of course, we'll see $2 remain a kind of psychological line for the gas. And throughout this quarter, we expect that gas prices will remain low because they are, one of the things we've seen in that ecosystem is that there's increased stockpiling in Europe, after what happened last year. But much more, in Europe, gas consumption in terms of gas conservation was about 20%. So there is this innovativeness in the use of gas. People are becoming more conservative in using gas. So that is depressing that demand for gas. And we're seeing the U.S. stepping up its gas production. Remember that last year it increased, this year, first quarter, it increased its gas export by 4%. And we're seeing the Texas Freeport that was closed last year is about to be opened this year, and
so we expect more drop in the price of gas.
Of course, so we're going to see. We're not expecting that the price of gas will push up that much. Well, for Nigeria, it's
and Nigeria, we're talking about gas stations now.
Yes.
So there should be more demand.
There should be more demand for gas, but the production.
All other things being equal.
Exactly. Because gas is seen as a better or a climate-friendlier alternative to a heavier frame. But of course, don't forget that last year, our gas exports declined by 15%, and that's the worst in Africa. So I think the NLNG also still need to do so much more to take advantage of the gas ecosystem.
Yeah, Mr. Clem, that's why when the IMF said that Nigeria's economy is one of the most stable on the continent, a lot of questions are being asked. But anyway, we're going to have that conversation.